Hello, welcome to Forex Club's Market Review, week November 26th to 30th. Last week saw the Euro and Sterling moving within the ranges that we outlined in the previous review. Dollar Yen took us by surprise somewhat and gained ground, closing at 111.09. The week saw ambiguous data from both the States and Europe, leaving the market uncertain over the future impact of the credit crisis. The UK is feeling as much pain as the US, leading to initial expectations of a Bank of England interest rate cut, resulting in this negative impact on the pound. Midweek saw the UK express inflation concerns, which fueled expectations that the Bank of England may delay any tightening. Consequently, sterling rallied, testing 20800, but the move up didn't last. October data has also caused the Eurozone concern about inflation, suggesting that the ECB will not cut its rates in order to curb inflationary forces. The euro-dollar also fell in the latter part of the week. The Fed hinted that it was more concerned over growth than inflation, and we think that the Fed will cut interest rates again in December in order to make money cheaper. Bernanke's speech saw the return of some stability and spurred the appetite for risk. Carry trades were back in favour, fueling a sell-off of the yen. Although Fed interest rate cuts could lead to further weakness in the dollar, the market is aware that the European currencies share exposure to the credit crisis and that the Fed's dovish policy could help the US avoid recession. Both the Bank of England and the ECB expressed concern over inflation this week, which suggests they are less likely to cut rates just now. All traders need to follow next week's events closely. Of particular interest are the Bank of England's and the ECB's interest rate statements on Thursday and the US employment figures on Friday. We still believe that a pound close below 205.50 against the dollar will be a bear signal, with the next support at 204.35. We also expect euro-dollar to range within 146 to 148.10. With the recent market, it's highly possible that the European currencies will be vulnerable at the start of the week. However, worse than expected US job figures and the looming FOMC meeting on December the 11th will make it difficult for the dollar to hold positions, making a drop a likelihood. Well, that's all folks. See you next week.